Oh, hi everyone. Oh, we started on time. Great. Welcome to the webinar. I know some of you have been with us for the two previous ones and or just for the one that we literally ended 5 minutes ago on the indices. And now we are going to be looking at stocks. Stock trading. I haven't put investing in, but stock trading, but I'll explain later. There's an awful lot we want to try and get through today. But before we start, as usual, let me go and find it. Sorry, David's laughing at me.
I would have to stick it on the front anyway.
Oh, fine. Yes, but I have to say it in live. This is recorded, and the disclaimer always does come up in the recording. But those of you who come along regularly, and I'm sure go to other webinars as well, you will have seen variations of this. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. For those of you coming along for the first time, we're going to look at the charts, the analysis of the charts through the prism of what we call volume price analysis, and it's this intimate relationship between price action and a volume. And the best way to understand the concepts is to actually see it on the charts. But I suppose if I had to sort of boil it down, what you're looking for is you're looking for anomalies. You're looking for those areas on the chart. The price action is developing, but it's not being supported by the requisite amount of volume. In other words, the move is not genuine. That's what you're looking for all the time. And just to help explain what we mean by anomalies and the kind of signals that we look for, the book has a companion where there are 200 worked examples drawn from stocks, commodities, and some indices. There is also a version for the Forex market because this methodology is applicable. It doesn't matter what you trade. A chart is a chart. Doesn't matter. There's a crypto book on Amazon as well. And today it's a very big day for the crypto market because it's the Coinbase IPO. So goodness, the market is getting terribly excited over that. I mean, there's talk that Coinbase is going to have a bigger valuation than Goldman Sachs. Wow. So we'll have to wait and see. Don't know, has it been, has it been launched yet? It's usually at the open, perhaps a little bit later. It's usually about 10:30. We'll see. We'll see what happens. Right. So there we are. Volume price analysis. This is the little house analogy that we use. Volume, price action, candle. We use candles. Patterns. Patterns are hugely important. And support and resistance. Support and resistance. Really, support and resistance lines. If you want me to, how you draw them on your chart is up to you. We use price-based and we use volume-based. We use Camarilla. And as I said, we use volume-based based on the volume point of control, which you will see on the chart. But what they actually do, support and resistance, they tell you on the chart where those areas are so important to other traders and to the market. And what they also do is they then, if they develop over a period of time, they then, if you like, there's a supply and demand. It's where price is going to perhaps reverse. And if it doesn't reverse, it's going to congest. So, you can interpret support and resistance in a number of different ways. You can measure it in a number of different ways. But essentially, what you're looking for in these zones is the price going to either break away from here or is it going to reverse? There's really just two questions that you need an answer to. And talking about support and resistance and congestion and trends, I'm going to go to stocks, but I just wanted to show this chart because this is a kind of dilemma that can happen when a market or a stock is in a very strong uptrend and you've missed the beginning of the trend, you've missed the middle of the trend, and and when a market is in a strong uptrend, the temptation, the narrative is, oh, it's got to reverse, it's got to reverse, it's got to. Well, yes, it will reverse, but not necessarily. It's because no one likes to jump, no one likes to chase price as it is called. But if you understand trends, if you understand Wyckoff's 3 laws, if you understand volume price analysis in terms of pullbacks, so this is a primary trend. This is just happens to be the YM on the day. So you can see it's in a trend higher. The only thing I would say about this at the moment, and I mentioned it in the previous one, the volume at the moment under all these indices is not fantastic. Does that mean the price can't go higher? No, it means it can go higher. Markets go up, can drift higher on not a lot of volume. When you're looking for a big reversal, what you're actually looking for is you're looking for narrow spreads, but you're looking for tons of volume to go in. That is one of the key anomalies where you are likely to get a reversal. There's a lot of effort going in, but not a lot of result. At the moment, we're getting quite a good result for not a lot of effort. It is anomalous. Does that mean it can't go higher? No. Now, as a trader, in a way, it doesn't matter, because you as a trader, your time horizon is a day, it could be a couple of days, but it's very, very short. As an investor, it's more critical, because you think, well, you're looking to hold something for longer term. That is the only difference between a trader and investor, is that really how long are you going to hold a particular asset or an instrument. But to get a view of what I mean by anomalies, and there's some really nice examples on the indices, and this is just the daily chart, and I'm using the daily chart because as historical, because you need to see this, you will see this in the faster time frames. You can see here this sort of arching a type of price action, sort of catenary price action. It's kind of drifting higher, but the volume was noticeably falling away. So we kind of know that it's kind of running out of steam. That's what it's known at. It's running out of steam. And that's one of the things that you can look for, particularly when something is moving very, very strongly higher. Now, back on the down at the coal face, if you like, of this price action that we have at the moment on this is the equivalent of this is the US 30 of the Dow Jones. This is the futures for the Dow Joneses. Well, it's going higher because the Nasdaq is kind of not lagging a bit. There's this thing about this rotation into value, etc., etc. But this is earnings season, and earnings season is expected to come in absolutely stellar. And I think we've had, is it Wells Fargo? One of the banks has reported today. Banks will always do well when interest rates are on the rise, because they only, as I said before, they only have one product, and that's debt. So if they've got, people want to pay for debt, they've got to pay more. So this is this trend higher on the YM. This is a couple of things I want to mention here. This is obviously Globex. This is a 24-hour version. This is a 24-hour contract. And you can see here we've had a congestion. As I said earlier, a price will move a break from congestion, or when you're in a trend, you have a pullback, and in that pullback, you want to see what the volume is. Is the volume, if it's falling, then the trend is likely to continue higher. So this is your primary trend, and you're looking at what the secondary trends are. Now, I know in this one you can see it go higher, 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 and actually the volume is falling away, and you think, well, okay, why hasn't it reversed yet? You have to bear in mind the time. The time at the moment is, this is the open, so this volume is slightly not misleading, it's distorted by the inrush of the physical open, but it will settle down, and the anomalies will come around. Now, this is my 5-minute chart. This is my 15-minute chart where I have my Camarilla levels. Hopefully I can expand it for you. And as I said, the third, it actually chewed right through the third. The fourth, it looks like it's going through the fourth as well, and it just gives me the targets, if you like, for the price. Now, the hourly chart is extremely interesting, because the values on the hourly chart stay on this chart for the rest of the week. And what's interesting is, in fact, it's kind of between the S3 of this week, and where is this going to aim for? If it's going to carry on higher, well, it's certainly going to try and get to the R3 at the moment. We've also had a volatility candle triggered. often means that will retreat, it will slow things down. This is that huge momentum that we saw on the 5-minute chart. That's the volume underneath it, which is what you would expect. What I also have under here is I have the dollar yen. The dollar yen is a great proxy for risk, and they're kind of moving together, and that tells me that they are in congestion. So we could get a congestion on the YM as well, but certainly in terms of where it's heading for, the R3 is the key to the upside for this particular instrument. And of course, you know what the Renko does, it gives you a geometric look at this particular piece of price action. We can see the kind of choppy price action that we had here. We can see the trend monitor dipping in and out of the different colors. But as I said, there's two ways of joining this. You either wait for a break of the congestion, the breakaway, which was actually down here at the R2, and then definitely a strong breakaway at the R3, and this is the move higher. And what the Renko does, it keeps you in and it gives you the levels that this is likely to be heading to. Right, that's kind of a little bit of off at a tangent, because I've actually got quite a lot to share with you today on stock selection. Those of you who've been coming regularly will know that what I've mentioned was we need to try and find a way of picking stocks for different reasons, either for trading, for investing. You will have different criteria. Now, in the Forex program, and the reason I'm mentioning the Forex program is not only do you have to learn chart analysis through VPA, but there are two other elements in the Forex program. One is the fundamental releases that impact the individual currencies and currency pairs. For stocks, they are the fundamental metrics of the stocks themselves, and you know there are a myriad of those, and you think, oh my goodness, what am I going to, what do I pay attention to? And that's what I want to try and narrow down for you, the ones that I think you should perhaps have a bit of a handle on. And what I've done is I've put together some resources, some free resources, which you can go away and you can put your stock into. One perhaps that you are, maybe you like to trade Apple, maybe you like to trade a low float stock. It's entirely up to you, but you will get those, at least get a handle on what these metrics mean. And the third element of our Forex program is what we call related markets, and that is what is going on in the other markets other than the one that you are trading, because certainly in Forex, there are certain currencies that are the drivers for those currencies. It won't just be the fundamental releases, but also the general sentiment in the market. So to give you an example, Aussie dollar, the Aussie dollar will rise if there is risk on, and also it's very, very heavily tied to commodities. Now, to relate that back to stocks, there are certain, as I mentioned earlier, there are certain stocks that are going to perform better, certain sectors that are going to be stronger at certain times of the economic and business cycle. And the way to look at, and I've got a fantastic resource to share with you to do with sectors, because what you're doing is you want to kind of check that the stock, the technical picture of the stock might look fantastic, but actually when you do a little bit more research on it, you think, do you know what? It's a bit of a laggard. I probably, maybe I should look for something else. And it's putting together those little bits of information that will give you the best trading opportunity. So I'm not sure I'm going to finish it all today. I'm actually going to do it in a more sort of a structured way. I'm going to start, so bear with me. There's going to be a lot. Take a note, have a pen, have a piece of paper, write down these resources that I've come up with. And in fact, the stock and what I'm also going to do is I'm actually going to make a little sort of portfolio of stocks for these sessions based on the different kind of things that we're looking at, and then we can have a kind of narrative for them as we go forward with the sessions. And one of the stocks I have is AHT, and I'll show you how I run it through the various websites that I found. But very interesting about AHT. The reason is I really liked it because it's had this really nice break from the volume point of control that we can see here. We have this move lower, but the candle which really caught my eye was yesterday was this one. It's a very it was a nice big wide down candle, but it had a wick to the bottom of the candle, a lot of volume underneath it. It also stopped at a very key volume support level. These support and resistance levels, these bands that we have here through the VPOC indicator, they are delivered by the indicator. And you can, I won't say 100%, but when the price stops at one of these bands at the outer edges of the price action, you can kind of say, do you know what? Something is going to happen. You're going to get a reaction, and that's what. And looking at that yesterday, I thought, do you know what? I reckon that's going to go up today. And do you know what? It has gone up today. And if we go to the, let's see, the 10-minute chart, let's have a look. Here we are. There we are, and here we are. This is today. These are the session breaks, as we can see here. This is how it ended yesterday. It, with all support and resistance, you have to have a little bit of leeway with it, you know. But you can see that it really hugged the. Was it 20? It was only $2.12 actually for a very cheap stock. It's remarkably consistent in price action. This is the other thing I was looking for. I don't want a stock, masses of gaps everywhere, masses of I just want a stock that I can show VPA, consistency, you know, respects kind of levels. And, you know, when we look a little bit more detail into the background of the stock, you'll understand why I looked at this and I kind of really liked it. Right, I'm going to pass to David because it's going to take me a couple of minutes just to sort myself out. You okay to take over, David?
Yes.
Is that all right? Get a different voice.
Hi everyone, welcome back. Sorry, not quite so manic as it was at the end of the last session. Apologies about that. Might need to space them out a little bit more. It's a bit tight because we always overrun anyway. I'm on a stock chart 2. And this is on multiple time frames, and really just this is actually one that, let's go to this one. This is actually a stock that we wrote about, I think, early part of this week actually, HBAN, financial services market. And really just to show you that it, from an intraday perspective at any rate, this could be anything. It happens to be a stock, but it could be an index future, could be a commodity, could be wheat, corn, could be a currency. It doesn't really matter. It's the principles of trading are exactly the same, whatever it is you're doing. I've got the trend monitor on here. The reason that we particularly like this stock, just move the chat box out of the way. This is on the weekly, and as Anna said, obviously this is financial services, banking. You want to know what that sector is doing, and in terms of, I'm sure Anna will cover it anyway, but in terms of sectors, there are a lot more than you would imagine. There are hundreds of, there are primary sectors, there are subsectors, there are subsectors. You know, it goes on and on. So it's always a question of understanding in terms of what you are doing, whether you're an intraday trader or whether you're an investor, is at least having some idea of how that particular sector is performing. And interestingly, just divert for a moment, in terms of the Forex program, it's also something we cover there in terms of economic cycles, because economic cycles are such a huge part of the rotation of stocks and which stocks and sectors perform particularly well at certain turns in the economic cycle, which in turn obviously has a direct relationship to interest rates also, and inflation and everything else. So it is all interrelated in some way or the other. But this is one we like. And the reason we liked it was particularly, again, it's one of those stocks that doesn't whiz about. A lot of intraday traders, I know for a fact, particularly stock traders, will look for volatile stocks. They'll look for those stocks which really whiz about all over the place, both intraday and longer term. Fine, you know, it's whatever suits your particular approach to the market. But this is on the weekly time frame, And the reason we liked it is because it's relatively straightforward in terms of price action. It's relatively measured. You can see the buying that came in here. What you're always looking for is you're either looking for very low levels of volume or high levels of volume and associated price action. And you can see the anomalies here instantly. You've got a narrow spread candle, but you've got a heap of volume. In fact, the highest volume on this particular time frame, and how far back it goes, fair away. So that's the highest volume. So, if that stock is going to sell off strongly, then clearly it's being bought at that particular point, because if that was a heavy sell, then this candle would be way down here somewhere, because it's the widest, it's the highest volume, and therefore you would expect the volume to be that much greater than any of these or that. You can see the volume on that candle is not quite as, probably a bit over half, but you get the general picture. So this narrow spread candle is a real strong indication that you've got some very, very strong buying under that particular candle, and therefore it's very unlikely that it's going to return to the volume point of control. It doesn't tell you that this is going to continue or when it's going to continue, but what it tells you is there is strong buying, and at some point this trend that started to develop here will actually continue. I don't know whether these levels were on at that particular time. They may or may not have been, depending on how far the price action went back at that particular point. So that's anomalous. You then get the uptrend. You've got a volatility trigger on a weekly candle, which is unusual. And you're expecting some reversal price action, which you get, but then you get the same anomalous sort of price action again. Narrow spread candle, ton of volume coming in under it. So, what is that telling you again? Well, it's telling you this is not going to sell off very strongly. It's either going to congest or we're going to see a continuation of the trend, because this has to be buying in the same way this was buying. And on up we go. Then we get a little bit of weakness coming in here under the up candle. Get some selling coming in here, but then what's happened over the last 3 weeks? All of these candles have got wicks to the downside. So what is that telling you? Well, it's telling you the market at some point during that weekly period went down to, where is it, 15, 20 odd, and then recovered. So there must be decent buying in here. Again, there's a wick to the lower body, small or accept, but again, there must be buying in here. So this is really telling you there's constant support. If you've got the inverse of that, if, for example, these were all poking up to the upside and you had wicks to the upper body on that particular range of candles, that will be telling you that, yeah, this market's looking weak, it's not looking particularly good. But the fact you've got 3 of them here with clearly, every time the market falls, it's bought again. It falls, it's been bought. It falls, it's been bought. Looks as though I've got the same going on this week. It's fallen to 16 or whatever it is. Now it's being bought again. That's what you're looking for. And that's part of, I guess, candle patterns. It's also obviously part of VPA and looking at stocks. And when you look at stocks very quickly, you can whiz through them almost like you might you might go through a pack of cards very quickly looking for a particular card. The sort of patterns you're looking for. You're looking for sources, you're looking for this sort of buying, you're looking for lots of accumulation, or if you're looking to sell, you're looking for lots of distribution, you're looking for particular shapes and particular structures of charts, and it's that sort of concept that you're looking for the whole time. But that's the reason we chose this one, because it just looks nice. You get the little reversals, but you get buying, little reversal, but you get buying, little reversal, but you've got more buying coming in. So, and we're coming up to the top of the volume point of control here at 17 and beyond. We've got low volume node up there as well. And then obviously to extend that, you go down onto the monthly and see what the monthly chart looks like and how the volume point of control extends out in terms of a longer term duration for this particular stock, maybe holding it for longer term. So that was just a little bit of background on that stock, and that's what's happening on an intraday basis. You're back to looking at the trend monitor. What's it doing across the time horizons? Pretty bullish at the moment. Moved into a bit of sideways here on the faster time frame. This is on 3 minute. Got a pivot up here. And of course, when you get these big volume spikes, it does make it quite awkward to look at the volume in context. I've really got to pull that out, almost off the screen. There we are. And that then gives you a much clearer view of the volume, relative, without that distortion by having a large volume bar. So if you get a large volume spike somewhere, it's pulling the chart out that way, because then you start to see things like, for example, this little 3 candle arrangement here. We've gone from, it's not a huge move, but nevertheless it's perfectly tradable as 30 to 40, 42. But look at the volume, it's fallen away. So it's no great surprise to see this move into this congestion phase. It's not to say, you know, this doesn't suggest that this is just going to go that and vump all the way back down to the volume point of control. All it does is it tells you that that buying interest is waning for the time being, and therefore don't be surprised to see, you know, this sort of price action congestion, maybe a bit of selling. And you've also got to accept the fact that within this sort of price action here, there is going to be profit taking because there are traders in there. They've jumped in early. They've seen it rise. It looks nice. Thank you very much. I'll just close out and you know, take my profit off the table. So almost inevitably, there is going to be some pause point, a little bit of congestion, some minor reversal as profit taking takes hold. And then you just have to wait and be patient. Looks as though it's going to push higher. These are not anomalous in their own right because you've got narrow spread candles. So the fact you've got small amount of volume with them, you know, they're in agreement. There's no real anomaly there. It's not simply a case of looking at low volume and saying, oh, it's anomalous. It isn't anomalous because the spread of the candle is very narrow, and therefore you don't expect to see much volume under there. And you know, that's all part and parcel. It now looks as though we're going to try and push higher up to 1642 and maybe get away from this region and on. I'll just pull this back again because it looks a bit silly on that size. There we are. There we go. But you get the general idea. You don't get, I mean, you can see it here, but you see it much more clearly just by getting rid of this candle here. This is all the pre-market stuff going on. Can I pass back to you? Let me pass back to Anna. Hold on a minute. Oh, let me just have a quick look at the indices because we looked at those earlier on. This is on the 3. And as I said, you know, we've got anomaly here. We've got the NQ falling. We've got the YM and the ES trying to rally. And what's interesting now is it's the NQ is starting to pull the ES down, and it may well pull the YM over as well. And it could be an opportunity to go short and take an opportunity to the downside, having seen this nice rally early part up to the VPOC. Interesting. I'll pass back to Anna.
Right, there's actually quite a lot that I want to cover, and it covers all sorts of things, but let me just go to FinViz first of all, because FinViz was where I actually started about 3 or 5 sessions ago, and then I kind of got rid of it. I thought, oh, FinViz is not going to do what I want, but in fact, having spent a little bit more time on it, I think FinViz may be a good start in terms of an analysis of the individual stocks once you've kind of picked them out of the sector and the index maybe. This is AHT, and wow, AHT. In fact, let me just have a look at this. You've really got to see this, right? AHT was, let's have a look back on the monthly chart. At one point, it was $140. It's now $2. It's quite extraordinary. It's had a bit of bad luck. Yes, exactly. And this goes to prove that, you know, stocks can go to zero. But well, when we look at the metrics for it, and when we look at the actual traded volume for it, I think you'll be very surprised. Now, clearly, it's part of the hospitality industry, so clearly it would have been affected really badly by the pandemic. And we can see here, this is, in fact, this is, where are we? This is the monthly chart. This is last year, but in fact, the stock was on the skids pretty much since November 19, as we can see here. This is really the trend lower, and we can know it's the trend lower because we've got the trend monitor telling us so. But what's interesting about the monthly chart is it is actually at the volume point of control. The volume point of control is acting as a massive support for this stock. And what is also interesting, if you look at the volume that's going in at this particular price level, because inevitably a lot of investors, they look at this and think, oh my God, this stock was $140 and it's only $2. Oh, it must be a bargain. Well, there's probably a reason. Maybe there's a reason why it's $2, but that's an investing narrative. Let's keep away from the investing narrative for the time being. But I just wanted to give you a little bit of context for the price action that we are looking at the moment. And certainly, if this stock is going to climb anywhere near to those highs of $140, it's going to need never mind about this volume, it's going to need a ton and a half of volume. But again, back to the daily chart that we were looking at, and when we're looking at that support, that volume support level, which is here. This is from, as I said, this was yesterday's down candle with the wick to the bottom. There's clearly buying coming in there. But what's interesting, if we look over to the left of this chart, you can see that it's actually quite an important support level, because it has provided support in twice in the past, moved up, except it's come back and tested it. You know, nothing goes up in a straight line, and it may not, you know, it may not go very high. Well, I know where it's going to possibly be aiming for this week, because I know I've got the S3. What's also interesting about this section of this chart is if we go right back here to this massive volatility candle, those of you who come along regularly will know when we looked at GameStop, sometimes when you have these massive volatility candles, there's racking about, you know, you think a lot of traders try and jump onto that momentum, and, you know, they just, you know, they try and play the momentum, if you like, the volatility. Sometimes, you know, you can catch it, brilliant, you know, go for it. But what the volatility candle also does, certainly one of this range, it also gives you some more support and resistance levels that the market will respect moving forward. And because there's such a massive one, we had a similar one on gold I think it was last year, and, you know, gold then traded within the spread of this of that candle for weeks. This is going to carry on until we have, you know, a break to the top or the bottom. That doesn't mean that the range on the day is going to be insufficient for, you know, for you to take a trade. That's a separate issue. But it's just interesting that even if you're a day trader, is to look back on the chart and see how the price action is structured in terms of support and resistance based on volatility. So we have also support and resistance based on volatility. So that's that. So that one there. Getting back to this particular stock, I'm actually going to do this slightly backwards, but anyway, no matter. And I'll be going over different elements of these in subsequent webinars. And I think eventually I'll probably do a kind of summary of everything. So as I said, if I'm you know, jumping about a bit, just bear with me. This is FinViz, which is a screening. It's a screener. It's a free one. If you sign up, as I hear I'm signed up, you don't get all the ads flashing all over the place. This is still free, by the way. You either use the one with all the ads all over the place, but this is really tedious. But if you actually sign them and give them your email, you get this version. You don't get all the functionality, but it's, at the moment, it's good enough. I might even pay for it because it's really very, very reasonably priced. You then have various screening windows. Now, obviously, the thing is about screening, you've got to know what to screen for. That is what we will work to in subsequent, by the end of this little section of series of webinars that I want to do. I just want to give an overview today why I looked at this stock and how you can use FinViz. Now, FinViz, as I said, you can screen on technicals, as you can see it, fundamentals. You can put all your values in there, as I said, but I don't want to do them at the moment, because what you can also do is you can then just input the ticker itself, and you will then be able to do a quick run through of, you know, the history of this stock, the you know, just where is it in terms of its metrics, etc., etc., and also the all-important metrics that I think you need to be aware of for day trading, which is essentially what the relative volume is, how much volume is traded in the particular stock, because a stock that hasn't got a lot of volume going through it probably going to be more volatile, might be good, might be bad, but if you know it's got a lot of interest in it, then it's going to be a little bit more stable. And you can see it's stable because it doesn't have, you know, apart from this huge volatility candle that we saw here on the Ninja Trader chart, it's kind of, you know, it's been moving sideways. It then broke low. It broke out of this sort of pennant that we have here, and now it's trying to find this base which corresponds with these 2 points that we have here. But let's just see what the overview of this of it. So you just work your way through. So basically, we know it's hospitality. And it's hospitality, but it's actually in, they've actually put it in the real estate, but we know it, but it's the hotel and motels. Well, we know the problems that that industry had yesterday, but this stock was having problems long before the pandemic. I think the pandemic was the kind of, you know, kiss of death for it. It's obviously the US. This is the market cap. It's 232.82 million. Not huge, you know, it's billions. And this is the price at the moment at 231. And this is the volume. Now the volume is actually quite high. The trading volume. In terms of what you should be looking for, there's all sorts of different opinions on that. Some people will say you should only look at stocks that, you know, are doing 500,000 a day, as it were. It really is, what it actually boils down to at the end is you can get some tremendous moves in penny stocks, in pink sheet stocks that don't have a lot of volume. In fact, sometimes when there's low liquidity, you actually get bigger moves, but you've got to ride that tiger. And, you know, if you're confident in it and you're on the very fast time frames, then go for it. But if you want something that's a little bit more steady, you really need to look at a stock that is actually, you know, trading, there's a lot of volume going through it on a daily basis. Then you look at the value. Yes, I know I do have to upgrade my FinViz experience, which I probably will do. I'm not going to go through all these numbers because I think for day trading they're not actually particularly relevant. I think they're certainly going to be relevant for investing. We're just looking at the day ones. The three that, if I were investor, this is what I'd be looking at. I'd be looking at return on equity, a return on investment, and return on assets. But you know, again, for day trading, I would say, you know, interesting. But what I suppose what is interesting, if you get a stock and you have some very good numbers on return on investment, return on these three, then that's kind of telling you it's a good stock. So if it's a good stock for investing, possibly it's a good stock for trading. Just something to think about. And you've got to ownership. That's quite interesting. This is the kind of float. That's these are the outstanding shares, and this is the float. We've talked about low float shares that have a very large float, a large percentage of their stocks are floating. They are more difficult to manipulate. This is why the pink sheets move so much, because there's not a lot of stocks, so they tend to move around. Then you have what percentage of the float is actually short. Now the reason it's not a lot, it's less than 1%. Some traders like to have a very high number for the amount of shares that are shorted on the float, because it means the stock is could be subject to a short squeeze. And the most famous example of that is obviously what happened in GameStop, and you know, it blew out a couple of hedge funds, which is, you know, good for them, basically, the traders that did that. But this is not you know, huge, basically. Then you've got that's the ratio. The ratio is not particularly high. Then we look at performance. What have we got here? Yeah, well, it's got what the volatility is. You tend to look at beta. If it's got a high beta, it's going to be volatile. But I chose this stock, as I said, because it's just steady and it's got volume going through it. So if you want to day trade it, it's not going to, you know, you're not going to be exhausted by the end of a move. It's going to move in a fairly steady way. Technicals, where are we? The one metric that I am looking at in particular for stocks is actually looking at the RSI. We use strength and weakness very much in Forex. Those of you who are in the program will understand overbought and oversold. There isn't really the equivalent in stocks, because stocks have a bias to the long side. Stocks are bought for investment. No one buys a stock because it's going to sell off. Everybody buys a stock because they want it to go higher. So one of the things we're sort of debating ourselves is with our indicators is whether we can come up with some kind of indicator that will, you know, picks this up in some way and looks at how we could graphically represent this. There is a standard indicator on the on most platforms. And, you know, people say, oh, when it gets to 90, oh, I've got to sell, I've got to sell. But no, because as I said, stocks, excuse me, have a bias to the long side. So if you see a high RSI in a stock and it's supported, as I said, by the return, it's a strong stock. Yes, it will have a correction, but possibly not, certainly not as the sort of corrections that you'd be looking at in Forex, for example. I mean, Forex is great in a way, because it's a market of mean, it is a mean reverting market. It goes up, it oscillates, it goes down. So you buy, you sell, etc., etc. Stocks, you have to have a different mindset, and the mindset is nobody buys a stock for investment with the expectation that it is going to, to sell because it's going to sell off. Of course not. It doesn't work like that. Right? That's the custom one. The charts. Here we go. Tickers, basic, we've gone through that. Right, these are some of the numbers here that you can have a look at. This is the short float. This isn't the one with the relative volume. That comes under, yes, the relative volume is 1.85, not huge, but it's enough to be of interest if you like to, some traders like to look at relative volume. That's basically relative volume is the volume that is actually going through on a daily basis. It's more than the average, basically. Again, this is a metric which is there's lots of different ways to calculate it, and we're looking at perhaps a way of coming up with sort of kind of indicator and what have you, but that's for the future. The RSI here is got down at 35. The two levels that a lot of traders look at is 70 and 30 or 80 and 20. Now you could say perhaps it's got more downside. Yeah, potentially, it could go even lower, but given what we saw on the charts, I saw that buying coming in yesterday. This is the kind of conversation that you have with yourself. Now, this is really important. This is the news, and this is what really caught my eye, because this is from the 7th. Our options traders betting on a big move in Ashford hospitality, and the mere fact that the options market is kind of sniffing around is interesting. And I thought, that's interesting. Now, I'm not going to go off to the options market and have a look at this in more detail because I haven't got time in this particular session, but that is certainly that caught my eye, as it were. And I think, well, are we going to go for are we looking at a short squeeze? It will be interesting to follow the narrative for this stock as we move through these sessions. What have we got? And we've got the snapshot, and I think we've just got some stats there. Come to, I mean, FinSbit, it's $25 a month. Seriously, I mean, for $25 a month, I think it's brilliant. But like everything else, you've got to understand how to use it. The help function on FinViz is pretty good. But even so, if you're not familiar with these particular terms, they're not going to mean an awful lot. And like everything else, you've got to know which of the metrics to apply, depending on what you want to do. So if you're an investor, some metrics, the relative volume may not be particularly interesting. So, it's interesting up to a point. Now, then I thought, great, but what I actually want, because we talked about sectors, is I really want to know a bit more about sectors. And I'm just so thrilled to come across this site. It's called csimarket.com. And it's absolutely brilliant. David says, as David explained, there are sectors and sectors and sectors. And as an investor, what you want to do, if you're looking to invest, is you want to see what sector's doing well, what are the good, what are the strong stocks in that sector, and possibly investigate whether to buy them or not. As a trader, you kind of want to find the same information, just because you're not going to hold it for a long period of time. You want to find out what's strong, what's weak, what's doing well, what's not. It's another way of filtering using sectors. However, just before we go to that, there is another site that I came across, which is even more cool, which is this one. It's called novelinvestor.com, and it has the most brilliant heat map of sector performance. This is the S&P 500 sector performance since 2007, and it's really fascinating. There's also a heat map for the different markets, and you look at, because what we're looking at 2020, so what sectors were at the top and what sectors were down at the bottom, because if a sector in 2020 is down at the bottom and the worst performing sector in 2020 was actually energy, what you could say is, well, that was at the bottom. Is the market now ready to buy this sector and the stocks within that sector? And you can see energy has had a pretty ropey, performance. It's been bottom 2020, 2019, and 2018, and going back, as you see here. And it's such a cool tool. I think these people are just genius, and I have to send them an email and thank them for all, because this takes a lot of time and effort to put together, and if you were trying to do this yourself, you can forget it. Then at the top, you've obviously got, well, what are the sectors that have been outperforming, the market? And obviously this is information technology, and it's obviously the growth stocks. It's your Apples, your Facebooks, the Alphabets, etc., etc. And you can see when they were at the top of the pile. They were there last year, they were there in 2019, not the healthcare was at 2018, and so on and so on. And you can, honestly, you can spend hours on this. If you're fascinated by this data, which I am, I think I'm a bit of an anorak, David, a bit of a data geek, this tells you so much, because it can give you a hint of what maybe is coming up in the following, this year, as it were. And you can then track the performance. Now, healthcare is quite interesting. Healthcare has a bit of a checkered history, if you like. I mean, last year it was kind of in the middle. Where did the S&P itself come to, and with the sectors? So go and play around with it. You've got real estate down here, and interestingly, financials. Financials, as I said, they've got one product. The banks, they've got interest rates, debt. So maybe financials is one to go and explore. So that was great, saw that, fine. Now we have to go and look in more detail at, I know this is 3 different sites, but I haven't yet been able to find one site that actually combines all this information in one. I just haven't, and I doubt whether one exists. Well, I mean, I suppose if you subscribe to Bloomberg, you could, but then in even a Bloomberg terminal or a Metastock program, you kind of have to put this stuff together yourself. So go for the free stuff first. Right, here we are. Where are we? We have, these are your sectors. Here we are. And you have they come down here and what have you. But the really cool thing about this is, where are we? Let's go and have a look at financial. You can click on the financial sector, and you have these different tabs up here. So let's have a look at a performance. Hopefully, if I can remember, this is. And this is the financial, and this is what we mean by subsectors And you can see here, it then gives you the most amazing breakdown of, now this is where I think this is where old AHT is, down here somewhere. We can double check this. Now this is the sector performance, and clearly it's not in any, the only thing about this, it doesn't give it it doesn't grade them, so you have to sort of look down, but it's not terribly tedious. So what it also does is it gives you obviously a year to date, 90-day, 30-day, 5 and 1 day. And just as we look at multiple timeframes on charts, you can look, this is a multiple time frame for the fundamentals. So you look at this and you think, right, well, what sector has year to date, it's gone up 22, 13, 1.1, 2 point. So you could say that sector is in a trend, and the trend is up. is it worth exploring? So you click on that, and this is fantastic, this site. I mean, I'm sorry, I just got so excited over it. Then it comes up with the stocks that actually make up this sector, and what you can see immediately is that although the sector is strong and it's been in an uptrend, the individually not, it's not equal. The worst performance is Swiss Credit Suisse, but I think they've been caught by the guy Huang. I think they have been absolutely they are in deep trouble. So you could say, you can look at this in different ways. You can say, well, is that a good short, assuming there is a Credit Suisse version, something on your platform. Or you can look at, let's say Franklin. So Franklin is going up. 5 days, it had a pullback. It had a pullback. Overall, the trend is higher. It's 22.29 up on year to date. Up. That was the reds, you can see like a little pullback. So if we're going to, I haven't looked at Franklin. I'm just picking this off. And you look at that and you say, okay, Franklin, let's have a look. Let's turn that to candles. There we are. And you look at the candles. I can actually I can pull this up on my NinjaTrader chart with the indicators on it. But you can see here, the consistency, you get so much information. You'll get when the earnings, of course, we're in earnings season at the moment, that always has a big impact, but it gives you a view of what the chart actually looks like. So this is purely, spontaneous. Let's have a look. Let's put Ben in here, see what happens. Ben. Our son-in-law is called Ben. He's very sweet. Let's move to a 10-minute chart. Let's have a look here. There we are. Well, it was at the volume point of control in congestion. Then it had a really nice move lower, straight down to our volume support, and it's had a bit of, it's having a bit of a comeback day today. But this is how you could possibly, start thinking about your stock selection, obviously on the charts, but also bringing in those other elements, which are the fundamentals, the metrics. What metrics? We will cover that in more detail, gradually as we go along in this series of webinars, and also the related markets. The related markets in the sense that, well, this is a financial. Franklin Resources. You can then let's go back to, there we are. Next thing is you go back to FinViz, put it in here. I think I have to start a new, no, it hasn't. I haven't quite got to grips with this, so I'll have to do it next time. I think I have to start from scratch. Let's have a look. Let's try this panel. There we are, we did it. Right, so you've got the overview, financial asset management, and look at, this is what I said about the volume, over 500,000, fine, not like the other stock valuations. Where are we? Financial, yeah, so they're not huge, they're not stellar. I mean, they're all right, they're all positive, but not brilliant. Let's have a look. Ownership, big percentage short. Volatility. Let's have a look. That one. Technical. The RSI 52, kind of in the middle. Not one thing or another. Let's have a look. There we are. Volume there. As I said, this is the first time I'm looking at these, so I can't really, I'd have to spend more time on it. Let's have a look at the chart. Or is it sort of in a kind of channel? It obviously came off this the resistance up here. It's at 32, so to the downside, if it's got any more downside, or we'll certainly find some support down here in about the $20. What's the news on this one? Let's have a look. Franklin Resources under management, month-end assets. So looking for, yeah, we haven't looked at dividends obviously, because as I said, this is for trading, but it has got a big big short float, I have to say. That's quite a lot. Average volume is 3.6 million. Let's have a look. Let's have a look what the relative volume is. There we are, relative volume. That's quite low. That's 0.92. Yeah, I mean, for a day, I would say I'd probably look for more than that. Right, I'm actually going to stop there. If you've got any questions on anything I've said, just drop them into the chat box or drop me an email, anna@annacooling.com. But as I said, this is just the first run through of this kind of whole stock selection, looking at stocks. The technical picture is straightforward. It's VPA. It's now the fundamentals and also the related markets. And the related markets are the, what other influences are going to have an impact on this stock, on an intraday basis or on a longer term basis. And that could be, as I said, what's happening in the bond markets. Is it a mining stock that's to do with commodities? Is it a bank? Is it going to be bond yields, etc.? As a political options market, those are related markets, and exactly like our Forex program, you then put it together. And I think what we'll probably do, certainly not now, but in the sort of by the end of the year, we'll be looking to put this together to formalize it in a program that you will be able to obtain from us. Right.
Thanks, darling. Wonderful. Anna's just checking if you can hear me. Thank you, Keith, much appreciated. Let's move that out of the way. I'm going to wrap up in a minute just to have a quick roundup, see what's going on. YM is carrying on up. It's got through the 5 minute here, as you can see. It's trying to break away from the volume point of control here. We had a bit of weakness coming here. What's interesting is actually holding the NQ up as well. So between them, that's the NQ, which is a little bit bearish on the day, but the ES and the YM are trying to hold that up, pull it higher. But certainly been a good day on the YM so far. Nice trading. And you can either trade the mini Dow or the big Dow, so it's either $5 a point or $50 or $25 a point. Whichever you prefer. Let's just have a quick look at see what's going on in the market. Had a quick look, call in on gold, see what's happening on gold. Okay. Yeah, as I said at the time, it looked a little bit weak. The whole the whole rally was looking very just looking weak, wasn't strong. See the volume's falling away here on the uptrend, so it's not going to go far. It's probably going to go all the way back down to the VPOC. Nevertheless, it's tradable. Of course it is. Everything's tradable. That's gold. I've got silver up here. I haven't got the softs up at the moment. Similar sort of issue on silver. We had a big fall on the volatility trigger there, and a nice reversal. So again, it's nice and tradable. Just go and see what's happening on HBAN. Just to wrap up. There we are. We're up at 16.50 now. So nice little stock, 10 cents gone up since we were here last. I think we were at 16.40. Now it's up at 16.50. Not scary. Nice, steady price action, easily tradable. And again, got trend monitor here, helping to keep you in, moving through all the various phases, VPOC and everything else, and volume point of control below. So just up onto the 1 minute here. It's very nice. We've moved through this low volume region very quickly. It's what you expect to see. Whenever you get these low volume regions, as I explained this morning on the VPOC, that's where you expect to see the price action move through very quickly. It's moved through quickly there because there's nothing in the way to cause it to pause. If you've got price-based resistance, fine. We had some here. You can see it on the accumulation distribution indicator, got through there into this low volume region. From a trading perspective, you would look at that and say, well, all I've got up here is some volume that was probably over here at the time. So in terms of a move higher, yeah, that looks pretty clear. Not much in the way. I'm expecting that to move higher, and indeed it has. And we'll carry on higher. Looking for that to get towards $17 a share and on and up. There are earnings for this one, however, they are, I think off the top of my head, 22nd, is it?
Is it H-Bank?
Yes, 22nd, I think, or 23rd. It was on the post anyway, something like that. So there are earnings ahead. There's always earnings ahead. we used to heavily trade options, and it's one of the big bugbears. If you're in the options market, then you've got to be aware of it. There's very limited time when you haven't got an earnings season ahead of you somewhere, particularly if you're trading longer term as we were trading monthly options. It's very difficult to time your positions to avoid the options earnings or earnings forecast and all the rest of it. It's always going on. It's repetitive. It's relentless. It's every quarter it comes around. There we go. That's us done for the day. Thank you so much for coming along today. That's the post down here somewhere. There we go. It's the last one we did. That's on Anna's site, annacooling.com. So you'll find all the books there and all the links to the various sites. In terms of the indicators, you'll find them all here at quantumtrading.com. That's MT45, NinjaTrader 7.8, TradingView, and TradeStation. 2 versions of TradeStation, TradeStation Global and TradeStation Securities. On NinjaTrader 7.8, it's 1 license. I say this every time, or try to at any rate. If you do invest with us, doesn't matter whether you've bought 1 indicator or a couple of indicators. If you then upgrade to another, perhaps you want to upgrade to a full package, or you want to move on to the education program, you will always get credit for whatever it is you spend with us. And another factor is that if you have the full package, you'll always get all future indicators free of charge. That also applies to TradingView at the moment, because we're developing them. So if you invest in the TradingView package currently at $677, I think it is, as a full package, you will get all the other indicators we're currently working on free of charge, and they're coming out in the next few weeks. That's the matrix, the array, heat map, VPOT, accumulation distribution, and the 2 versions of Renko. So it's not a bad time to buy. As soon as they're released, then we will increase the package price, and it will align with MT4 and MT5. What was I going to say? I was going to say something else. Can't remember. Yes, transferring from one platform to another. It's always free. We don't charge. We never have charged and never will. It's you just ask us and say you want to move your indicators from one to another. We do it for you. Make it all happen. Finally, that's the Forex program over at quantumtradingeducation.com. I know we've got some students here at the moment. The complete Forex trading program, I won't go through it in detail. It's huge, it's comprehensive, it's what you expect. And we've also bolted on the funded Forex so you can trade our money with no risk to you whatsoever. That's it. We're going to run and grab a cup of tea. Enjoy the rest of the trading day. And thank you very much indeed for coming along today. Hope you've enjoyed it. More next week, as always. So we will see you then. And thanks for coming along, and bye for now.